Hello and welcome to today's Your Daily Five. I'm Tom Bowley, Chief Market Strategist of EarningsBeats.com, and I'm happy to join you on this Monday, July 13th. Before we get started with my Daily Five, I wanted to just point you all to EarningsBeats.com. We do have a free newsletter, so if you'd like to be kept up to date with a lot of earnings news, relative strength news, and so forth, I think you'd enjoy this free newsletter. So simply go down under this area, under the Earnings Beats Digest, just provide your name and email address, hit the subscribe button. You can unsubscribe at any time. There's no cost, no credit card. Would love to have you. And honestly, it will give you an idea as to how we look at the market. You can see over on the right-hand side some of our portfolios and how we've significantly outperformed the S&P 500. The Earnings Beats Digest will kind of give you a little bit of insight as to our approach to the market and how we do that. The other thing I'd like to mention is that later today at 4:30 p.m. Eastern Time, you're invited to join me for Q2 earnings sneak preview. This is a public event, open to everyone. It's free. Don't have to sign up for anything. I will put a link in here after 4 o'clock today. And also, all you have to do is come back to earningsbeats.com after the market closes. You'll find a link. Just click it. Join us. We'd love to have you. All right, as far as today goes, I thought because really earnings season kicks off tomorrow. We've got a number of large banks reporting starting tomorrow, and earnings is what we do. That's really our niche at Earnings Beats. We track earnings of companies, those that report very strong results. We keep track of them on a chart list, and then we're constantly looking for trading opportunities in those stocks. And the reason is simple. If companies are under-promising and over-delivering, then typically that is something that Wall Street can gain trust in. And when you start to see accumulation, you start to see relative strength in stocks like that. Those are the types of companies that you honestly really want to be looking at for trading or investing. So with that in mind, I'm going to take a look at mostly companies that have already reported, because tonight at that event, the Q2 sneak preview of earnings season, we're going to be looking ahead, and I'm going to be doing some forecasting as to what I think some of these companies are going to be reporting. So what I want to do now is just go over some that have already reported in the last few weeks and give you an idea of what you can expect or some of the things you should be looking for. So I'm going to start off first with Walgreens Boots Alliance. This is ticker symbol WBA. You can see that back since November, this is a stock that has been downtrending. It's been one of the worst performers in the market. You can see it's not far from breaking below its May low, which was below that March low when the market bottomed. So I don't need to show you really any relative strength charts for you to probably already realize this is not a very good relative performer. But let me go down here and I'll show you how I have my chart set up. This is the drug retail group. Just a line chart, how we've been doing over the last year. You can see the group's definitely rolled back over the past month or so. Then the next chart is Walgreens relative to its peers, relative to that drug retail group. And you can see on a relative basis, this has been a very poor stock within drug retail. How's it doing versus the S&P 500? Well, Walgreens is at a 52-week low right now versus the S&P 500. How about the group relative to the S&P 500? We want to know where money is rotating. Well, I can tell you money's been rotating away from drug retailers. The group relative to the S&P is at a 52-week low. Now, I was talking on one of my shows before Walgreens reported its earnings, and I indicated that I thought that this was a company that was not going to have a very strong report. And the reason being, you can see it's in a group that's been weak. It's a stock that has been weak relative to its group. And clearly down here, you can see relative to the S&P 500 setting a new 52-week low. Wall Street sends its analysts out, meets with management teams, and they form opinions as to what's going on in the company, whether or not they're going to have good results, bad results. Then they go back to their office and they buy for themselves and their clients, or sell for themselves and their clients. And that's why technical analysis is so important, to follow what Wall Street is doing, where the money is rotating. This was not a good chart. So we should not have been surprised that 3 days ago, they came out and they missed their earnings expectations. 83 cents they came out with. Market was expecting $1.10. And you can see another gap down, big heavy volume, and this downtrend, overall downtrend, continues. Now I'm going to go into some companies that have reported very solid results. I'm going to start with Coupa Software. This was a company that reported back on June 8th. So it was right back in this area. They beat 20 cents versus 7 cents, so it wasn't even close. And I want you to look at the difference of this chart You've got software rising going into that earnings report. You've got Coupa Software relative to software rising. You've got Coupa relative to the S&P 500 rising, and software relative to the S&P 500 rising. This is the configuration you really want to see on your charts. The more of these lines that are pointing up from left to right, the better, because it's telling you that money is rotating. It's a visual that's telling you what's going on in the market. Now, Coupa came out, beat their earnings, didn't really do much with that result, but look at what the company's been doing since. Software remains strong, Coupa remains strong versus its peers. Next up, ABM Industries. This is a company that reported back on June 17th. They more than doubled earnings expectations. Here was the market reaction. Look at the volume, look at this huge move to the upside. But do you see the false breakout at this double top? Once we got there, the sellers took control, and guess what we did? Went all the way back down and filled this gap. I actually like this stock from this current price. I think we're probably going to move back up. We're now at trendline support. I think it's got a shot to make another move back up toward 39.40. Now, on a relative basis, prior to its earnings here, the group was rising. ABM rose for about, I don't know, maybe 5-6 weeks, pulled back a little bit as it consolidated prior to earnings. With earnings, went back up again. But since it's pulled back to fill the gap, we've seen some relative weakness. The group overall versus the S&P, though, has been pretty strong. I think this is one that's going to rebound. Could be wrong. You can keep a fairly tight stop on it, but I think this is one that has a good shot to get back up into that upper 39 or upper 30s to maybe even close to 40. The next stock I have is Jabil Circuits, or JBL. I think they changed their name. Actually, they changed it from Jabil Circuits to just Jabil. But here you can see JBL rising. Here was the gap up with its earnings. Another company that beat 37 cents versus 34. So you got that gap up with earnings, nice volume. Came all the way back down, got a 50-day test, close to recent price support. And now look at the stock starting to turn back up again. You got a group that was doing okay. I think on a relative basis, it'll show in a second, not that great. But Jabil was one of the leaders versus its peers. It's been on a rise versus the S&P 500. And then when you look at the group, the last month or so, it's coming back down. But Jabil versus its peers is actually turning back up. So I like this breakout off the 50-day moving average. I think this one's got a little bit of room to run. The last one I have, this is more of a comparison. So my last chart will actually be comparing two charts. I could have put them all on one chart or both of them on one chart, but I want to show you separately so that the panels are a little bit bigger. These are two of the large banks getting ready to report. And I just want to show you the difference in what Wall Street is thinking before these companies report. Citigroup in this nice uptrend, pulls back, it's got great support right here at about 50 bucks, bouncing off its 50-day moving average. You look at the bank group, not very good, but look at Citibank relative to the banks. It just went up and hit a 52-week relative high. Now, that doesn't mean necessarily that it's going to be the best stock out there. It's just telling me it's one of the best bank stocks. The problem isn't Citigroup. The problem is the group itself. Banks relative to the S&P just set a new 52-week low. So the group is weak, but Wall Street is saying that Citigroup is actually one of the stronger banks. This one, if any of the banks do well this week, I think Citigroup could be one that does well. I think JP Morgan actually is not setting up too badly either. But those are two that I would consider if I was looking for a bank. Now, one I would not consider is Wells Fargo. This company has been under pressure for a long time. We just recently went back close to the May low, which was below the March low. And I want you to look at the relative strength here versus its banking peers versus Citigroup. Citigroup was going straight up. Wells Fargo is going straight down. They're both banks. Which one do you think Wall Street likes? The one where Citigroup is outperforming the banking group, or Wells Fargo where it's clearly been underperforming? This is a stock that I would not touch as we head into earnings. And so what I'm going to be doing later this afternoon, again, go to earningsbeats.com, check in here. I'll post a room webinar link and you can join us, but we'd love to have you, and it's free. It'll be open to the public. So hopefully you can join. All right, that's it for me. It's a privilege coming on here to your Daily 5. Want to wish everybody a great day. Happy trading.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.